lots of different companies that we offer for ULs, but I'm going to show you guys specifically guaranteed ULs, okay? What do we like about guaranteed ULs as opposed to non-guaranteed ULs?
The premium doesn't go up.
It's still, yeah.
It may,
Like it doesn't cancel.
There's
even
three
if you
things that are guaranteed. What are they?
cash value.
Guaranteed to an age.
Death benefit and premium, right?
Yeah.
Isn't that the reason why people like whole life as well? They really use the cash value. What happens when you die, Rodney, with the cash value inside of a $10,000 policy with $3,000 cash value? What happens?
Company keeps it.
What do you mean the company keeps it? That's my money. Why would they keep it? That's my cash value. What good is cash value? What can you do with it? Borrow it and pay it back plus interest like a glorified credit card, right? What else can you do with it? I like the way you think. Or you could surrender it and then just pay the taxes on it if you wanted to, right? I'm going to show you a couple different scenarios that we have here. I'm going to show you behind the scenes. Scott had mentioned about if a policy comes back as rated or tabled. I'm going to show you guys how to do that as well. This is the actual North American software. There's a lot of stuff on this screen. You're only going to use about 8 of these little tabs here, okay? If you're not doing a 1035 exchange and you're basically just in a house and somebody wants a $100,000 guaranteed UL, what website would you go to? iGroup Tools. Everyone knows that, right? You only use this if it's something a little bit more complex, like 1035s or if they get rated, okay? To get this software, you actually have to log on to NorthAmerican.com. You guys all have usernames and passwords, and you can actually download the software. It's a beast. It takes like 15, 20 minutes. I was here earlier, and then you have to download it and update it, and you have to keep updating it. So, but that's how you actually do it. You go through the actual website and download the software. Okay? So I'm actually going to. This should be fun. I'm going to kind of work through this here a little bit. I wanted to make a side note. I don't want to erase that stuff over there, but I'm going to make a side note here because whenever we're talking about life insurance in general, if you run across somebody that has multiple policies and they've got a 7,000, an 8,000, a 12,000, what are those typically? Those little small policies. What type of life insurance is that?
whole life.
Pretty simple issue, whole life, right? Well, what if they're 67 years old and they don't take any medicines, their height and weight is great, and they're in really good health? You can get a fully underwritten policy, right? I really want to make sure this is clear. I use this about every once a year that I do these type trainings. Use the 3-finger rule when you're talking about life insurance. If they don't want to get their policy out, it might be a reason to kind of get them out of their comfort zone. So ultimately there's 3 types of life insurance, and I'm talking about the grades of health. They don't care how old you are, they care about what your health is like. One of these clients up here, Miss Lily, is a real scenario that I did. She's 77 years old and she got preferred non-tobacco at 77. This lady's a feisty little German lady and she is super sweet. She's really, really fun. But they don't care about how old she is. They just care about how healthy she is. So when we're talking about the 3 fingers, I mean a graded policy like Colonial Penn on TV. You're just a ball of joy today, aren't you? Graded benefits, right? 2-year waiting periods, no health questions. Next one up, simple issue. You guys know this, but I want to make sure you can convey this to the people that you're sitting in front of. Simple issue is the next step up, only a basic phone interview maybe, and just answer some health questions. What's the top of the line one?
Fully underwritten.
That's how you explain it. Don't say universal life. It's a fully underwritten policy. You explain how it's guaranteed and everything afterwards, but you're only talking about the levels of health, okay? So you have 3 policies right now, Ms. Cheryl, and all of them are in this category. Well, if you have 3 policies totaling $30,000 in life insurance, what happens with every single one of those policies? There's what built in? You say it all the time, I know. There's fees for having those, right? A policy fee, admin fee to send your statements, to do all these things. So for every policy you have, there are more fees wrapped into it. What I'm going to talk about is potentially condensing all of those into one really good policy. When you're talking about the 3 different qualities of life insurance, you're all in this health category. Well, if I put you in a room of all of my clients and there's 1,000 people in here, you're probably healthier than 900 of them. But your health doesn't warrant that. You're paying more rates because you got just simple burial insurance. We're going to condense what you have and see if we can get you the fully underwritten policies out there. If you don't explain it this way, they're going to tell you, I guarantee it, I just want to think about it, because they don't trust what you're doing. Why is your life insurance so overwhelmingly different? And when I show you guys these scenarios here, a lot of them are like, wow, that's too good to be true. But if you explain it with this way and the policy fees and everything wrapped into it, it makes more sense to them. Set yourself up the entire way. Don't just show them what it is and say, okay, this is it. They're not going to believe you. So going back into this, the main one we're going to use here, and I very, very rarely use the other two. Creep up all in here. It's going to be the guaranteed, it's the Gen 8, okay? This specific company is North American. I like North American. They seem pretty fair. I've had people got Preferred Plus that I thought would get Standard and vice versa. And a lot of times when we're not getting these policies approved, there are things that simple issue policies wouldn't even get approved for. Client had COPD and they're taking medication for that. Shame on me for not even knowing that, or the client not explaining that. Okay? Don't be upset with North American if there are blatant things on there that they don't tell us about. I like North American. Their rates come up as some of the best. And always put your best foot forward because someone's going to come in behind you and potentially replace your policy if you don't. So we're looking at Universal Life. Universal Life, it's going to be the Custom Guarantee Gen 8. Okay? The name isn't super important. Can you actually type for me while I'm doing this?
Mm-hmm.
Just be very deliberate with your typing there because it's a pain. So go ahead and just type in, the first one's going to be Lily. Okay? Type in 77. And she's female. Preferred non-tobacco. I'm going to talk about Lily's situation. This is a little bit more conceptual as well, not just illustrations. Okay? Dave talks about finances all the time and setting up 529 plans potentially, putting money aside for grandkids, right? Well, I ran across a lady that I wrote a couple of annuities for in the past, and her name was Lily. And in this specific situation, she had money set up for her grandkids she wanted to make sure she left behind. Every time I did an annual review, she would add more money to her annuities because she wanted to leave it behind and she had excess funds, right? So she's got 4 grandkids and she had $15,000 in each of them, and every year she added about $1,000 to each one of those accounts, right? So this is where Dave goes back to his principles, is what's the goal of your money? Well, in this situation, what's the goal of her money?
Legacy.
That's it, right? This specific thing, that's what it's designed to do. And I sat back and I'm glad because I keep getting renewals and things on these, and I'm like, wait a second, what kind of health are you really in right now? What's going on with you? And I explained to her what we were talking about, and what we ended up doing is we take these accounts here, that totals about $60,000, right? She gets $60,000 of cash in these accounts for her grandkids that are in her name, and when she dies, that's when they're going to get it. I specifically asked, you have other funds set up. This isn't her life savings. She's got another $500,000 in her broker account, other things going on. This is specifically earmarked for her grandkids. So if she's got $60,000 in there, and she's roughly paying $4,000 a year, she's eventually going to grow this account over the years, right? Well, I said, if you're 77 years old, and I actually quoted her preferred because she took no medicines, let's see what we can do in actually making this an estate policy and just making it a large life insurance policy. And whether you pass away a year from now or 20 years from now, they get a tax-free benefit, and it's the full deal. If they pass away 2 years from now, they're going to get $15,000 plus whatever she was able to add to it with the little interest it's made.
What is it in now?
Just a couple of them were annuities, and they were beneficiaries of. So, but I want this concept to ring true because you may find people like this. So what I'm going to show you guys here is that if we're going to add $60,000, it's not a 1035 because it's regular savings that they had, right? Just taking $60,000, putting it into North American, and funding it once a year with an annual premium. Does everybody understand that concept? Because the goal of her money is to leave it behind to her grandkids. You hear people talk about 529 plans. I actually like life insurance a little bit better because it's a guarantee. Another question?
No.
You had your hand like this, like you were ready to...
No, like I was picking cookies out of my fingernails.
Right. Gary's crumbs all over him and everything. So.
Is it the same, is she doing it for a tax break or for any kind of tax purposes?
They do get help on the 529 plans with the tax breaks and things like that. When I show you here, it's going to really minimize the actual advantage of that are. So when we're going through this, it's pretty straightforward. It's just a glorified life insurance, right? So we're going to go preferred non-tobacco, South Carolina. What's the 1035 exchange amount?
0.
0. I want to make sure it's a trick question. You want to make sure that that's 0. 1035 exchange means it's coming from another life insurance policy, okay? Non-1035 exchange is where Susan is going to put in 60,000. That's good. Okay? So we actually know it's not going to be a monthly EFT because she gets her required minimum distribution that she's actually using to fund these anyway. So we're going to go to annual. We're going to put in a specified amount, and let's put in, just put 4,000 in. It's not her fault, it's the keyboard. Susan, put 4,000 in.
Maybe the numbers lock us off.
No, it's a pain. It's the Wi-Fi and the Bluetooth and all that other.
You need a better keyboard.
It's not my keyboard.
No, it's-
Okay, so for a basic death benefit, we can put 250. We can actually change this afterwards. I very rarely add riders, withdrawals. These are if you're trying to build cash value in different ways. There's other things. Basically, this whole page is just narrowed down to a few things that we have to plug in. Now we go to solves. If you change anything, if I go back to policy info and I change anything and then I click view, it's not going to update it. You have to switch the tabs over once and then hit view for it to update. It's kind of quirky, but just make sure you do that. You don't want to mess up. So we're going to go to premium. Let's actually go to death benefit. So we don't know what our death benefit's going to be. What we do know is that we're going to put 60 grand into it. We want our death benefit guaranteed to 100. Okay? And then we hit view. 63,000 death benefit.
What about 121?
I know North American likes this, what we're getting.
Where did we get the
you're getting
4,000
ready to
from?
It's just basically what she was adding to each of these. She was basically throwing $1,000 into each one of them a year, or our minimum distribution. So that's pretty neat. With a stroke of a pen, she's doing this anyways. Instead of leaving behind 60,000 divided up by that, you've got 221,000, and she's 77 years old. Life expectancy, let's say she put her at mid-80s or so. If she makes it to 90, that's a pretty nice deal. It's going to take a long time for this 60,000 to equate to 221. Okay. Now, when I showed her my triplicate of choice, I showed her 250, 300, and 350, and she went with the 300,000. That was 75 grand for each of her grandkids, because she's looking at the whole ball, everything wrapped into it at once, and what excess money she had.
Where's the price?
Second
the
line.
premium?
Second line.
Death benefit? No, premium.
Premium is
4,000.
Initial annual premium is 4,000. So when you're actually looking at this page here, you got her female, the death benefit, a $4,000 annual payment, and a non-1035 amount of 60,000 that goes in right away. Okay? The numbers were actually better back then. I think maybe Lincoln Financial did a better job than North American did right now. If somebody's really close to their birthday, this is important. North American, you can actually save age, and you can go back like 6 to 9 months, and you don't have to pay back that premium if it's a 1035. And I asked the person, I said, that doesn't make sense. Why wouldn't everybody do this? And they said, because people don't know about it. So if I've got somebody whose birthday was December 15th, I can actually save age and go back to July, special issue date for July, and they can use 1035 funds to cover that. And it's still guaranteed all the way through, okay? So the positive side to this is that every single year it's a fixed amount, and it's going to be, no matter what happens with the S&P 500 or the stock market or anything else, their grandkids are definitely getting a specified amount. That's a goofy number. Like I said, if it was 300,000, she's leaving them behind 75 grand a piece, and they can be used for anything. It doesn't have to be education purposes. If they end up running their own business and they're a carpenter, now they can use it as a startup. They can buy a car, they can pay off debts, they can do whatever they want to do with it, as opposed to like a 529 plan. Okay?
Vegas?
Vegas, yeah, a lot of people do that too. Very
They're all
smart.
on red.
So,
This escapes probate as well.
this
And
escapes
it's
probate as
tax-free
well.
to them,
It's
right?
tax-free, yeah. Now, let's talk about the pros and the cons. Nice, you've got a guarantee, there's no questions asked, you pay your premium and it's paid out. Her minimum distribution was more than enough to cover all that we had anyways. That's where that 300,000 sweet spot was. It was enough to cover her annual taxes and to cover her life insurance premium. What are the downsides of this program here in a guaranteed universal life policy?
It doesn't build cash value fast.
Awesome, that's exactly what I wanted to be brought up. So we're putting this cash value into it. You're going to see as you scroll down a little bit here, the cash value eventually hits 0. You can't scroll down on this page, you have to go to next up here. So you're going to see when we go to the illustration side, this is designed specifically to be left behind to the grandkids. So the first year they get $60,000 of non-qualified funds, or just regular cash going in, paying $4,000 a year. So the first year is $64,000. Every year afterwards is $40,000. When you see this underline here, that doesn't mean that's not a Primerica policy. It's going to jump up to an $80,000 premium. Whenever you see an underline, it's the cumulative of how much money they would have paid into this. Okay? And a lot of people like to look at that so they can kind of figure out what their internal rate of return is. So if we fast forward, and we go all the way down here, let's say let's go all the way to 97. She's 97 years old, right? She would have paid in $140,000 into this specific policy, and her grandkids still get $221,000. But what if it's any of these lesser amounts here? God forbid she passed away at 85. My grandmother was 87. She would have paid in less than $100,000 to give her grandkids $221. That's pretty awesome. Guaranteed, no questions asked. The market's up, the market's down, no extra fees to manage these accounts. And somebody mentioned before, but what about that guaranteed to 100? This actually goes a little bit further than that. I'll go to the next page. It is guaranteed to 120. Okay? But what I love about this, and we're going to talk about this going into these ones here, let's take a look at that cash value. Rodney, before you couldn't get your cash value out, right? You had to leave that with the insurance company, your own money. This is squeezing out every last dime out of your policy to help pay for those premiums for you. So you can see here, when you see that 0 cash value, that's when you're beating the insurance company. Because that means that no matter what, you just pay your premium, even though there's no equity left in the policy, that thing's going to keep going contractually to your 120.
I forgot.
When did you stop?
Oh, so at this point, you stop paying premiums?
No. No, when you were on the phone, I was actually telling everybody that you actually do stop at 100 years old. So at 100 years old, it's considered paid up. So congratulations, you're a centurion, and you have no more life insurance payments.
So how do you, I don't know.
Figure out your commission?
No.
That's usually a game question, let's be honest.
No. My question was, how do you explain to them, because you just explained it again, that their whole cash value goes gone. You said you're beating the insurance company, which is great, but most of my clients would be like, what? Where's my cash value?
My $64,000 went down to $44 right
That's
away.
why this is important. That's why you preamble the entire conversation. Rodney can care less about his cash value. He's not going to get it anyways. Let's use your approach, and let's say your cash value is $200,000 at 120 years old, and your death benefit's $221. What good does that do you? If the goal of it is to leave behind to your family. Okay? So again, this is taking what they already have and maximizing their goals with it. You don't take somebody's life savings and do this with their money. This is saying, here, listen, I've got this going on. This money's earmarked for my grandkids anyways. This is the most efficient way to do it. Okay?
Hey, can you put in there real quick, what would 4,000 without the 60,000 dumping?
I'm glad you mentioned that, because that actually gets into the next part here. People ask me all the time, how do I figure out my commission on the dump-in? Okay? They ask me a lot how to do that, because it's kind of a pain. That's why. Can you type in 300,000, please? So whenever you're doing a 1035 exchange, it's kind of like when you buy a house, right? If I bought a $100,000 house and I paid and I didn't do any down payment, it would be a specific mortgage payment. If I put $20,000 down on it, my payment would go down, right? Same exact concept here. We're getting paid on the resale value of the house, not how they pay for it. So if they're putting money down and then they're paying a little bit of premium, it doesn't matter. We're going to get paid off of the commissionable target. What was the full cost of that case even without a dump in? So just because she's paying $5,000 a year, that's not what we use as our target premium. Our target premium is a lot higher. In this specific situation down here, and this is about the magnitude of what it was, you see this down here? This is the premium from which we actually do our percentage.
Don't get it.
So for easy math, if you had a 50% commission rate, you made $5,500 on that one case.
That's on the 60-something?
That's on the entire case total, if you added the 60,000 to it. Now, if you don't add the 60,000 to it, I'll show you that. Just go ahead and hit 0. Okay? And we hit the solves. It drops it down a little bit, but not a ton. But what's important is a lot of people are actually surprised because they're looking at their commissions like, oh, I got to take a percentage of the 60,000 or the $4,000 premium or $5,000 premium. It's not. It's over the total target. So if we solve for that one, it gets kind of goofy. I don't want to spend too much time on that, but obviously the rate goes way up, just like a house. If your mortgage is going to go up if you don't put a down payment, or a car or anything else. But I did want to open your eyes to something like this, where somebody's like, I don't need life insurance, I'm all set. Jerry had a great one on the phone last week. She said, I don't need life insurance, I've got 30,000, was it 30,000?
Who are we talking about?
Okay.
You know me,
I know Jerry's phone calls better than she does, apparently. $30,000, I have 30 grand in a savings account, I don't need life insurance, this is what I'm going to leave behind to my daughter to pay for my burial and everything else. And I said, well, wait a second, for 30 grand, what if we took 15,000, put it into North American, got 30 grand paid up, and then you can go and blow the other 15 grand and paying off debts or going on a cruise or going to Vegas if you want to. Well, that's a good idea, if that's what it's earmarked to do, okay? Or you can say, I wouldn't recommend this, but how much can 30,000 of paid up life insurance get you? Put 30 grand in, now you can get 80,000 in life insurance. So, if somebody says they don't have life insurance, don't be an order taker and come around with your drinks and say, what do you guys want? Try to get the gears turning a little bit and do stuff like this, and there's some big pops that came out of it. Yes? Loud so everyone can hear you.
We have to order a pyramid with this.
Louder.
Loves the answer. You don't know the answer to that? Okay, what's the second one?
Yes.
Second question is, how does this compare to like final expense policy where you're doing the exact same thing? Just dumping money into it.
You can dump into it. This is a good question, so I'm actually glad you mentioned that. So to answer this question, you do have to order medical records, you have to do parameds. When you're getting the top of the line insurance out here, they're going to put you through the ringer to get approved, okay? Now, because we're going into this category, the numbers are overwhelming. To do a single pay and to dump 30,000 into this category might get you 50 grand. To dump 30 grand into this category might you get more like 70 or 80, okay? If somebody's really in bad health, you can go to this single pay anyways and do it that way if you wanted to. I've done that before. Now, you cannot put money into this category and add monies just like we're talking about here. I want to make sure that that's clear for everybody because people ask me that as well. So if you're doing a settler's life, right, and it's a single pay, it is what it says it is. It's a single pay, okay? You pay it single in there and it's done. That's it. You can't say, well, what if I paid $50 on top of that? What I've done before is you do a single pay and then write a separate other life insurance if you wanted to help make up the difference, but they can't be in the same policy. This is flexible premium adjustable life, so we have flexibility inside of it. If you guys ever seen that in the statements or in your testing.
And you said she was using this for R&D, so.
She had R&D coming in anyways, like, what are you using it for? Lives very modestly, and she said, I'm basically just going to keep adding it to it.
Do you know how to mute your phone?
No.
You might know.
Okay, let's go to the next lady here. This is Mary. She lives down in Bluffton, okay? This is actually a referral from another client that I had, and they had Knights of Columbus. You guys ever run across them before? Call them up, because they are loaded with cash value. This is a fraternal organization. I think it's through Catholics. I know all the Catholic churches I've seen had Knights of Columbus, but it's not the cheapest insurance out there, and it has a lot of cash value, and especially if they're older policies, okay? So this specific person here had 3 life insurance policies. Whoa, that's exactly what we just talked about. 3 policies in this category. This woman took no medicines and she was in fantastic health, right? So all the cash value that was inside of these policies totaled to be $12,000. 12 grand in a $23,000 policy. If you're doing a bucket presentation, half of that bucket is full of her own money, which is not doing her any favors, right? And the other one too is that if you're making a phone call, what do I always say about goofy death benefits? Start licking your chops. There's either a loan against it, or it's got a lot of cash value because dividends keep buying more. There's different things going on. Nobody wants a $23 life insurance policy. That's not the quote that they accepted. They're usually a round number, okay? So after all said and done, I'm going to show you guys what it would do for a North American. Let's go back through this and again. Again, this is somebody that's in good health. I've had people ask me questions before saying, well, what if they had prostate cancer last year? Rule of thumb is if they can't get this category of life insurance, don't bother sending in a UL. I've seen a lot of goofy apps before and be like, oh, the guy has congestive heart failure. I didn't think it, maybe they'd overlook it or whatever. Obviously not. If they can't get this, most of the time they're not going to get this. All right? And its clouds are up. Cloudy days. All right, so we'll just leave. We're going to make everybody Lily, so you don't have to keep punching on that historic core keyboard there. And we're going to put Mary in, and Mary is 71. Okay? She also got preferred as well. I'm going to leave preferred non-tobacco. This is where I'm telling you guys where a lot of people get disgruntled and be like, oh, North America, they don't do it. I've had several people get preferred before, just the right clients. Just put 40,000 in for now. Okay, and what are we going to put for a 1035 exchange? We're going to put that 12,000 number, right? It's actually closer to 13. Sorry, let's go back to 13.
It's trying. Whoops.
Okay, here we go. All right, whenever it's a 1035 exchange, we're just going to acknowledge that it's okay. Payment mode is going to be monthly EFT because that's how she's paying hers now. Now, in this situation, she's paying a premium of $22 a month. She's already paying. They said, is it really a big difference? She's like, I really don't care. I'd rather just get a little bit more life insurance. So in this situation, I'm going to go ahead and change the premium type to guaranteed death benefit at age 100. If you don't see this come up, it's because you're in term GUL. Okay? If you don't see this heading, it's because you forgot to change that to the Gen 8. Just remember that. It's happened to me a couple times. Okay, so pretty straightforward, right? Lily, 71, preferred non-tobacco. We're going to hit solve to change the screen over. And then we're going to hit view. Well, it didn't come up as it was before. So I'm going to go back basically to what the stats were before. It was $24 a month. So, same exact situation. Okay. Does everyone see that? That's a no-brainer when you're talking about these kind of things. And when you're talking about these concepts, Randy always says this before, today's apply day, not buy day. When you're doing these presentations and you're having these conversations here, all you're trying to do is get an application. If they jump out of their seat and say, oh my God, I love this, I want this right now, or they say, I don't know, I really want to talk to my kids, I guess we'll kind of see what happens here. Either way, you walk out of there with an application and a voided check and the intent to do it, it's the same process either way, so just remember that, okay? And if you can get the application going and you get the process through here, and they get the paramed done, once they do the paramed, they're definitely not going to back out on you. So, in this situation, it's an extra $17,000 for roughly the same premium. If you really want to pinch pennies and get it to be exactly the same, you can talk about how far the policy is guaranteed out to. These are all guaranteed to 121. If you want to guarantee it to 95, you want to guarantee it to 100, whatever their comfort level is, I definitely would not go less than 90. But some people have said, hey, do it to 95 to save a little bit of money.
Cash value is going to work the same way on this?
All of these cash values in a guaranteed UL are eventually going to hit 0. So if their design is to have cash value in there and to potentially cash that in at some point and go without life insurance, this is not the right move for them. If that was the case, you may want to go with a money guard, and I've written those before. Somebody says, I want to have this cash value because if something happens to my daughter, there's nobody else, I'm spending it. So we did a money guard instead. Single payment to money guard, it's a whole different concept, but basically like Gary was mentioning, like a whole life policy, okay?
What's that money guard? Is that like a Royal Neighbors? Single pay?
It's a little bit more complicated. It's very similar. You put a lump sum into it, you get a death benefit, you actually get some other bells and whistles as well attached to it. But it's kind of neat because you have that access to the funds the whole way through. So I'm kind of rolled through these things. I don't want to bore you guys too much. We got people who have been doing this for 8 years and people have been doing this for 8 months. So I'm trying to kind of keep this moving. So this is for grandkids and leaving behind money, okay? You get somebody with $100 grand in a CD and they have other funds going on. They say, I want to leave this behind to my family. Let's see what an estate policy can do and run the figures. If they've got a bunch of smaller policies in this category, see if you can condense them down, get them all wrapped into one policy, and get her an extra $17,000 to leave behind to her kids. This last one, this is the one you guys have seen before. My now and will be with George. Okay, this is one of the biggest cases I've ever written, and it wasn't a no-brainer because I had to battle a prudential agent the entire time with this. But it was very overwhelming, and these numbers are pretty awesome. So when I met with this guy here, he didn't want to do anything. He's a retired fisherman right out of New York City. He used to run the fishing boats out of there. Okay, and started with a med sup like we always do. Made him a client with a med sup. Go back, let's take a look at your life insurance, and do our fact finder like Dave's always preaching. George is 74 years old, and he had all of these policies with the exact same company, and that's Prudential. How many of the companies does Prudential represent?
Probably a bunch.
No,
Just
it's
Prudential.
You don't like Prudential? Well, let's get you some Prudential. You don't like Prudential? We'll go ahead and put it into a Prudential instead. We're brokers. We go out there and we have a, we're confined to a certain realm of the companies that we offer, but we can go out and get other ones. So every time you went back to see him, he sold him another little policy. Every single one of these has more policies and fees built into it. All said and done, he had 220 grand in life insurance, and he was paying $5,600 every single year. So he's 74 years old, and with life expectancies of males, what would that make a female to be the same rate? 7 years, right? So that's the same qualifications of an 81-year-old female getting life insurance. If you guys didn't know that, I don't know what you women do to us, but you live 7 years longer than we do. And they know that, so they built that into the actual rates that we're doing this, okay? So let's take a look at this. This is going to be the male version of Lily. And he got standard. He didn't get anything specific. He just got standard. He had a couple of medicines and things. So he gets standard non-tobacco. Type in 220. And check out all those goofy death benefits. That's all they are, right? They're even goofier than that. I kind of rounded some of them off. Take a guess at how much cash value is inside of $220,000 in life insurance.
30.
$95,000 of cash value.
Wow.
You may run across one of these in your career. I've run across two that were about the same caliber. But if I didn't know what I was doing and I was just doing basic quotes, I would have left it by the wayside and someone else would have scooped it up. So you're not going to run across these all the time, like the annuities that we've talked about. But if you do, make sure you have all the tools you can to get it.
Did his Prudential agent get fired for losing?
It's actually a sad story with the Prudential agent, but he's not. He actually passed away.
Oh,
I called up a couple of years afterwards to find out what was going on. Super nice guy, just there's nothing he could do. Okay,
Hey, John,
so
trying.
1035, we're going to change this to 95,000. We're going to change this. We're going to acknowledge that. Guaranteed death benefit age to 100 is right. Actually, no. Let's do. He's paying a specified amount. Let's change this to an actual amount here, okay? We'll look at this first. Let's just see how much money we can save him potentially, okay?
74 now.
Hey, whatever it takes to get the sales guys, all right? I'm joking. Delete that. I'm pretty squeaky clean when it comes to this stuff. Okay, so basically, we're just taking all the life insurance he has and we're condensing it into one policy. No more fees wrapped into all these different ones. We're just trying to get one basic policy, okay? We hit solve, just to change that and update that screen, and then we hit view. These rates have changed a lot. I did this about 7 years ago, so the numbers aren't as good as they used to be, okay? Where's Randy? Where's Randy? Woohoo! You know, Randy, woohoo! Pretty sweet, right? So you got a 74-year-old male, 81-year-old female, if you want to look at the lifespan of these things here, and you can do the same exact $220,000, and instead of paying $5,600 a year, he's got less than $2,000. That's almost $300 a month. If I said, hey, Jay, when you retire, I'm going to give you a $300 pension for doing nothing but being healthy right now. That's what this is. That's $300 every single month. Guess how much his med subs were that I sold them? $300 a month. I said, I give you free med subs for the rest of your life, if, you know, with rate increase and everything. But pretty neat to do this. I'm going to go back one more.
It'd be interesting too, though, just the 95,000 of how much he would have gotten. Maybe he didn't need that much.
And that's exactly what you can do too.
Because if he doesn't want to spend a dime
You've
of
seen my now
insurance.
movie, haven't you?
Nope. I just did one though.
I actually changed that a little bit. I actually looked at that, and this is another important thing. You run across someone who's got a lot of credit card debt. Ask about their finances. It's not part of the normal fact finder, but if you do run across that, and it's, let's say it's 20 or 30 grand, ask them how much credit card debt they have. He may not need to save all that money. What if he took 75 grand and rolled it over, and then took 20 grand and paid off the Visa card that he had racked up on fishing gear or whatever else he spent it on? So
My
there's different.
girlfriend that killed him 8 years earlier.
Don't tell his wife. She's the beneficiary.
Of course.
So that's a good point. Somebody, whoever just mentioned that, it's a good point. You don't have to use all the 1035 money going over, okay? But whatever you do take from the 1035 funds, they're going to look at the cost of, what do they call it? Adjusted cost basis, and you're going to have to pay taxes on any kind of interest that's made. So it would be a taxable event in some situations.
But not until withdrawal.
Unless they actually withdrew it. And if they do want to take, let's say in this situation, he said, I only want to roll 75 and I want to cash out the other 20, you need to borrow against that policy first as a loan and then do an absolute assignment agreement to 1035 the funds over. Because when we send Prudential a 1035 form, on the top it says absolute assignment of 1035 funds. This basically says everything that comes over to XYZ company that we represent, it's all coming over. Well, now we want to borrow against it. The guaranteed ULs aren't designed for cash value, right? So make sure you borrow against the policy first, right away. You're not racking up months and months of interest. And then you go and do the absolute assignment, and then whatever is left comes over. And then we pay tax on the loan that was left in the policy. Okay? I'll show you one more idea and just kind of bump this up. Now, this is important as well. A lot of times, people, when you're looking at like a triplet of choice, when I go up in death benefit, it's not going to be the same ratio, okay? If I did a $440,000 policy, it's not going to be exactly double in premium because we put a lump sum down into it. Does that make sense? So everything we add in death benefit right now is straight adding more life insurance and paying for that. Because the lump sum's already in there. We're not adding more lump sums to it. I'll show you what I mean. Go ahead and change that to $300,000, please. Again, we got to switch the screen over just to update it. And hopefully we can stay under 5,600. Still did. So at 74 years old, I can give his kids an extra $80,000 and still save them $400 a year. So when you do your triplicate of choice, you can do lots of different options inside of there. When I did mine now and will be, I showed him what it would be like if he wanted to take partial cash out. So I'll give you the exact numbers on it. So in this situation, when I did this back then, because the life insurance rates have changed over the years with interest rates and everything else, I actually did the exact same 220 grand with Lincoln Financial Group, $990 a year. So this payment of $5,600 dropped by $4,700. That's $400 a month. Okay? If he said, and I was preparing for this prudential agent to say that, because our one weakness in guaranteed ULs and the cash value is what? What is our weakness?
No cash value.
Cash value is going to dwindle, right? That's going to be his only chance at salvaging all these policies that he's written. And I knew he would say that. So instead of saying, listen, you have the opportunity to take a loan against 95 grand, I said, if you need any money out of this, I don't need all 95 grand coming over. You can take $53,000, put it in your bank account, and just pay the taxes on it, and never pay it back, and I can do the exact same death benefit and same premium. So would you rather have a credit card debt of 95 grand or an actual check for 50 after taxes? Does that make sense? But again, it's a now and will be. Norman mentioned this in the last Friday meeting. It's very nice, it's very organized, it's got the fancy border like David mentioned before. It just shows that you're organized with this stuff and you're going through everything. Another thing I mentioned also is that if I go across this and somebody doesn't get it, or they're just kind of like hemming and hawing when it's this good, I'll blanket this side out and I'll basically flop it on them. Let's say you had a policy, Dre Diodana, let's say you had a policy right now and you had 220 grand and you were paying $990 a year for it, right? Harry walks up to you and says, hey, I got great news. You give me, what am I talking here? I can do the same 220 grand for $5,600. You're like, why would I switch? That's $4,700 more. That's exactly what we're doing, but in reverse. And it makes more sense when you're doing it on a sheet of paper and you're showing it to them. Cover one side and say you already had these. Why would you want to switch and go this way? It doesn't make sense. All I do is I'm here to help you. And this would help you a lot.
Hey Matt, what about taking that, what would it be considered if you would take that and put it in an annuity? Would that be a 1035 or what would that?
What's the ruling on that?
You can't do life insurance to
You can't do life insurance to annuity. You can do, no,
the other way around.
backwards. You can't do annuities to life insurance. You can do life insurance to annuities.
Non-tax, right? You don't have to pay the tax when you
Right,
transfer.
it's a 1035. 1035 means you don't pay the tax on it, yeah.
Have you ever tried to do that or has anybody?
Not really. No, I mean, usually they're pretty much going for a lot of these things and getting more. Because once they have life insurance and it's got that life insurance chassis around it, they'd just rather have more death benefit and things. So, or they'll just take a partial cash out. So, hopefully you guys found some of this. I know you guys is a review for a lot of people, but hopefully some of these concepts are a little bit different. But the biggest thing is you got to get these policies out and you have to call on them, because if I tried running a quote and this is all he says, like, I don't know, I got a couple $100 grand and I'm paying this, and I ran a quote and be like, oh, you've got good insurance because my policy is going to be $12,000. Yeah, $12,000 straight up, but not with the down payment you put into it.
I never did a 1035 before, but if you do a 1035, when does it happen? Because do they have to get approved first and then they move the money?
Absolutely.
Okay.
So basically what happens is you go through the underwriting process, exactly the same thing you would do normally. It's one extra form saying it's if you want a 1035 the cash, and you send that in all up with it. Then when you come back and they say they got issued standard, preferred, whatever it was, then they say initiate the 1035 process, then they send the form to the other insurance company. They usually take up to 30 days to do that, and let your clients know whether you're replacing their basic whole life or these fully underwritten policies that you're probably going to get a phone call from a telemarketer trying to save the business. Oh, please don't leave us, you know, we'll do this better. And be like, it's up to you whether you want to take that or not. I basically say too bad, so sad. If you knew all these things were so much better, you should have done this for me on the front end. I have little kids, so.
I can tell with the goofy.
What?
I just say goofy a lot.
I say goofy a lot?
Yeah.
Could drop some F-bombs and you're really good at shaking up here. But, yeah, goofy death, I say that all the time. So I tell clients that too. Do you guys have any questions about this at all? Try to add some kind of value to a last minute Tuesday at 2. If you have any specific questions about this, my door is always open. I don't need to go back in these houses with you. I don't care if you're on my team or not. Just come and say, hey, I have this. Can you help me put something together? With these now and will be's, I've seen some really, really ugly now and will be's. You want this very basic, and to turn around and show it to a 75-year-old and have her understand or him understand what's going on with it. You don't need to put issue date, all these other things wrapped into it. All they need to know is the basics, death benefit, and what's in it for them. Don't put all the other fluff on there. You've seen business cards before when there's all this junk on here and you can actually find where the phone number is? Same exact thing. Don't add more chaos to what you have. It's just distracting. These take a long time, okay? If you write one of these policies like this, don't expect it to get approved in a week. Don't expect the 1035 to come in a week. It usually takes about 4 to 6 weeks, come top to bottom. I've even had them go over 2 months, maybe even 3 months before. But if I can do the jabs with the Care Improvement Plus and come out with a knockout blow with this, and I'll show you the commission that's on these things, it's awesome.
A lot better than a single pay premium.
Well, it's better for the client too. Because if you rate that single pay premium and you're a different company and I come in behind you, I'll take the single pay, I'll do a 1035 from this category to this one, and do the same thing that you did to them. You know what I mean? And you always want to put your best foot forward so you can't replace it. Look at the commissionable target here though. That's the number that we take our commission rate on. That's a lot, that's like annuity type commissions there. So if you run across one of those a year and you make 6 or 7 grand off it, that pretty much lights the year on fire for you. On top of everything else that you're doing. All right, veterans, did I miss anything?
You might want to go over it because you mentioned get the app. Sometimes that's very intimidating for new agent. Just tell them how we get
Good,
the app.
I'm glad you mentioned that, okay? The art of closing, right? Oh my God, you gotta close and you gotta push. And Matt's probably a pushy guy because he's from the north. This is my close, right? I show them the different things. I don't stare them down. I don't get anything too intense. I just say, well, I just explain the process and I assume it. Whether I want to get Chinese food for dinner, I assume it with my wife. Where do you want to get Chinese food from? She always does that too. She catches me. Are you trying to close me right now? I don't want Chinese food. Okay? But it's true with these things as well. Just assume it all the way through. Great questions. Who do you want your beneficiary to be? If they don't give you an answer, you need to go back to the drawing board. If they give you an answer, just stop. Just stop what you're doing and say, okay, I don't have to push anymore. I don't have to talk about it anymore. Who do you want your beneficiary to be? Oh, you want it to be your son and your daughter? Great. The process is we have to do the application. I'll have the nurse come on and do the blood and urine sample. I just need to see your driver's license. If they get up and go get the driver's license, you run out to the car and you go get an app. That's their close. You assume it. Who do you want your beneficiaries to be? I just need to see your driver's license, and that is it. If they go get their driver's license, that's them saying, like, you want to go ahead and sign up today? It's so corny and tacky. You don't have to be that kind of salesperson. A lot of times I'm out of the house and be like, I can't believe you're an insurance sales guy. Because I don't want to come across as one of those guys. I'm just here to help the best that I can. And we're offering these programs. I don't want to work with people my age. I want to take what they have and make it better, because that's what I preach in every one of my houses. You're in the market, you want to be conservative, you've got life insurance, med subs, I'll help save you some money. These are overwhelming things. When you're talking about this one right here, and that's the one he chose, unfortunately. I had some really huge numbers in there, but he went with the lowest one. I just saved him $4,700 a year. That's overwhelming. If I didn't preamble that presentation with what's going on with his basic life insurance now, he would have said, I want to think about it. I don't want to do anything right away. Well, why? I don't understand. Oh, he's just a jerk and, he just doesn't want to do anything. No, because he doesn't believe you. You didn't talk about, the 3 different fingers of life insurance and things. So, I'm exhausted. How about you guys? Any questions?
If you're gonna do a 1035 exchange, you can't use the e-app, right?
I've never done the e-app. I'm not really sure.
You can, but you have to use the 1035, you have to do the 1035 one separate.
So just pull it out of the app.
Okay, we're good. Thanks, guys.
Thank you. Good stuff.